Okay, guys, evening and welcome back. And hope you guys are doing well. And today, first of all, I'm going to start the student presentation fifth time. Right, it's the fifth student presentation. Right?
මං හිතන්නේ වර්ල්ඩ් රෙකෝඩ් එකක් තියෙනවා
Oh
දුන්නේ.
yes. Right. I'm going to do like 100. Right. Okay. So uh, okay. Now, first of all, I think I want to start. In here let's see බලමු කට්ටිය ගොඩක් අය නැහැ ඉතින් අර ප්‍රසන්ටේෂන් දුන්නාම ගොඩක් අය නැහැ right okay අපේ නම කිව්වා අපිට මුලින්ම කරන්න ඕනේ කිව්වා අපේ ක්‍රිස්ටිනා නැහැ නේද තාම right
එයි සදමි.
right ක්‍රිස්ටිනා එනකන් අපි කෙනෙක්ට දෙමු දැන් right okay so I'm going to give number 1 presentation elements of accounting Dulmini are you there just right okay so I'm going to assign you as a co-host. If you need, you can share something or you can do whatever you want, right? So let me assign you as a co-host. Yes, done. Can you hear me? Tulmi? Yes, right?
Yes.
Okay. So I told you the guidelines. Hope you can remember the guidelines. Minimum 4 minutes, maximum 6 minutes, right? So you can do the presentation, right? So I'm going to start the countdown also. Just wait. Right. Wait. Don't start the inform. Okay. Are you ready, Dulmini? Fine. Can you hear me, guys?
Yes, sir.
Yes, right. Okay. So Dulmini, are you ready? Yes, right. I think something wrong with your connection as well, right? Please check. I think hope you can hear me, right? Okay, let's start. Let's give the chance to
Can you hear me?
yes, we can hear you, but I think something wrong with your connection. Yeah, caddy ahead, right? Fine, clear, right? Okay, Dulmini, you can start.
Can you hear?
Yeah, we can hear you. We can start. Can someone send a message to the chat box to Dulmini whether check state we can hear? Oh, I think connection issue. Okay, till that I'll give the chance to Christina. Christina is here, right? Okay, so I'll give the chance to Christina. What is the topic of our Christina?
Bank accounts.
Bank account, right? Okay, so I'm going to assign you as a co-host. Right. This way I'm going to not advanced sharing option all parts. Who can share all participants? You can share, I think. No need to assign you as a co-host. you need, you can share. You can check.
I see.
Right. Okay, just give.
So can you see the screen?
Yeah, sure, for sure. Over to you. You can start.
Yes. Good evening, my dear sir and friends. My name is Christina Sunta. I'm going to present about bank account today. Firstly, I would like to thank our sir Heshan Sir for giving me this remarkable opportunity to present today. Today, we will be talking about what is a bank account, structure of the bank account, transactions related to bank account and its source document, example related to bank account. First, let's see what's a bank account. A bank account is a financial account maintained by a business or other financial institution in which the financial transaction between the bank and a customer are recorded. The bank account and the cash book are considered as asset accounts. Now let's take a look at the structure of the bank account, which is maintained by the business in books of accounts. In the debit side, we have date, description, ledger folio, discounts allowed, and value. And in the credit side, we have date, description, ledger folio, discounts received, and value. Next, let's see the transactions related to bank account and its source document. Transaction, deposit of cash in the bank, cash deposit slip, the double entry for deposit of cash, bank account debit, cash book credit. Deposit of checks received by the business, check deposit slip. The double entry should be as follows: bank account debit, cash book credit. Issuing of checks, payment voucher. The double entry for it is as follows: expense account or the relevant payment account debit, bank account credit. Dishonoring of checks, check return notification. Dishonoring of deposited checks, double entry for this is as follows: debtors or relevant account debit, bank account credit. Dishonoring of issued checks, the double entry for this is as follows: bank account debit, expense or relevant other account credit. Example, Ronaldo's business. Following transactions occurred in Ronaldo's business during the first week of January. Ronaldo deposits 20,000 in a bank and open a bank account. The business receives a check of rupees 30,000 from debtors. The business purchased trade goods of rupees 15,000 and paid with checks. Depositing the check received by the debtors in the bank, deposited the check from debtors rupees 30,000 was dishonored. Issued check for purchases rupees 15,000 was dishonored. Now let's enter these transactions to the ledger accounts. Ronaldo deposits rupees 20,000 in a bank and open a bank account. It is recorded in the bank account as cash book. Cash book is recorded as rupees 20,000, and in the cash book it is recorded as bank account rupees 20,000. The business receives a check of rupees 30,000 from debtors. The debit entry is recorded in the bank. The debit entry is recorded in the cash book as debtors 30,000, and the credit entry is recorded in the debtors account as cash book rupees 30,000. The business purchased trade goods of rupees 15,000 and paid with checks. But the debit entry is recorded in the purchase account as bank account rupees 15,000, and the credit entry is recorded in the bank account as purchase account rupees 15,000. Depositing of the checks received by the debtors account in the bank. The debit entry is recorded in the bank account as cash book rupees 30,000 and the credit entry is recorded in the cash book as bank account rupees 15,000. Deposited check from debtors rupees 30,000 was dishonored. The debit entry is recorded in the debtors account as bank account rupees 30,000 and the credit entry is recorded in the bank account as debtors account rupees 30,000. Issued check for purchases rupees 15,000 was dishonored. The debit entry is recorded in the bank account as purchase account rupees 15,000 and the credit entry is recorded in the purchase account as bank account rupees 15,000. Thank you for listening. Have a nice day.
Right. Okay. So well done. Let's give a clap. Very well prepared. Right. Give a clap. Nice and well done. And I appreciate your effort. So let's move to the first slide, please. I want to give you a few comments. First of all, let's move to the first slide. And the way you presented is really nice. And there are like I can see your effort and. So there are like inconsistency in the slides, and also what I want to tell you, when we prepare the presentations, don't you avoid using many animations. You need to use animations because when you uh, pre- discuss about the accounting parts, you need to show about the debit and credit entry. Because of that, you need to use animations, but you need to avoid the using many animations. Understand? So when it comes to professional presentations, we minimize the using animations, right? Okay, let's move to the first slide. In next one we can see the agenda. It's really nice. Yes, this is the outline, and then you can see the definition. What is the term called bank account, right? So bank account is a financial account maintained by a bank or other financial institution in which the financial in the bank and the customer are recorded. Now, mainly in here, the bank account means the current account. You could specifically mention about that, right? We discuss about current account in here, and the bank account is a financial account maintained by the bank on behalf of the business. Understand? Because this bank account prepared by the bank account transactions are recorded by the business. Understand? I told you in last Monday, business prepare the bank account, bank prepare the bank statement, bank prepare the generate the bank statement regarding the bank account. Can remember, right?
Yes.
So it's okay. The bank account and the cash book are considered as asset account. Okay, then let's move to the other one. You can see the structure of the bank account. Okay, then let's move to the transactions, and the first transaction, deposit cash in the bank account debit, cash book credit. The source document is cash deposit slip. Let's move to the other one. You can see the double entry, deposit checks received by the business. Double entry is bank account debit, cash book credit, but you could split this deposit checks in the bank. There are two types, right? Deposit on the same date. If it is the same date, bank account debit, relevant other account credit. Understand? If it is
Yes.
later date, first we record cash book debit and the other relevant account in the ledger credit. When it comes to depositing part, cash book credit, bank account debit, right? Now, let's move to the other one. Issuing of checks, the source document is payment voucher, relevant expense account debit, bank account credit. Okay, then let's move to the other one. Dishonoring of checks, the source document is check return of notification. There are two types of check returns: dishonoring of deposited check, the double entry, bank account credit, debtors account or relevant other account debit. Okay, when it comes to dishonoring of issued check, next slide. To check, bank account debit, expense account debit, right? Credit. Okay, let's move to the other slide. So there are different transactions you mentioned, and you are already you mentioned about the double entry also, right? Let's move the first one. Deposit 20,000 in the bank, and put the slide. Right. Okay. Deposit 20,000 in the bank and open the bank account debit, and cash book credit. Let's move to the other one. So you can see in here deposit 30,000, the business receive a check of rupees 30,000 from debtors. In here no information about the depositing part. Because of that, till we deposit it, where we record in the cash book. Can you remember, right? So because of that, cash book debit, debtors account credit, right? Let's move to the other one. Business purchase trade good 15,000 and paid with the check, bank account credit, purchase account debit. Nice. Let's move to the other one. Then deposit the check received by the debtors in the bank, bank account debit, cash book credit. Calling hambetch එක දැන් deposit කරන්නේ cash book credit, bank account debit. Then deposit check from debtor 30,000 was dishonored. Debtor කෙනෙක්ගෙන් හම්බෙච්ච check එක, deposited check from debtor 30,000 was dishonored. When it comes to dishonoring of deposited check, what is the double entry? Bank account credit, debtor's account, because we need to again restate the debtor and we need to remove the deposited value in the bank account. Okay, right. Let's move to the other one. So issued checks of rupees, checks for purchase 50,000 was dishonored. Dishonoring of issued check, when it comes to dishonoring of issued check, we need to debit to the bank account. Why? අපේ bank account එකේ සල්ලි අඩු වෙන්නේ නැති නිසා, right? So bank account debit, purchase account credit. Really nice, very good, and it's really nice, and I can this is the way I expected, and I can give you good mark, right? Okay, thank you, well done, right?
Thanks.
So let's move to the other one. Right, Christina done. Right, so then let's move to the other one. අපි දැන් ඉමු අපේ ඉන්නවද කියන්නේ අපේ දුල්මිනි ආයුධය. Now it's fine.
Okay, sir. Can you hear me?
Yeah, we can hear you. So you can share.
Sir, can you check the chat, please?
Yeah, I'll check. Okay, Tulmini is going to discuss about elements of accounting. Am I correct?
Yes, sir.
Okay, but something wrong with your connection. Caddy wage ඇහෙන්නේ. Okay, let's start. Never mind. Okay, over to you, Dulmi. අපේ කවුද?
My dear friends, today I'm going to represent about all the basic accounting elements in accounting. Before that, I would like to tell you what is accounting. Parties of a business for their decision making. Now, I would like to direct your attention to the topic called objectives of accounting. So, what are the objectives of accounting? We can list them as like this: to know whether the business has earned an adequate profit, to know whether the financial position of the business is sound, to fulfill legal requirements, and to minimize disadvantages arising through omission and commission of transactions, and to organize financial activities are the main objectives of accounting. Now, I would like to direct your attention to the topic called business transactions. Transactions can be identified as an exchange of resources between a business and other parties with a monetary value. As a result of a transactions, following accounting elements can be arise. The main accounting elements are assets, equity, liability, income, and expenses. First of all, I would like to talk about assets. What is known as an asset? An asset is a resource controlled by the business as a result of a past transaction and from which future economic benefits are expected to flow into the business. Assets mainly can be divided into two parts as current assets and non-current assets. Current assets belong to stock, debtor, and furniture. Land, building, and equipment can be taken under the non-current assets.
Dulmini, we can't see your presentation.
The second element is liabilities. Well, what are known as liabilities? Payables of a business that had adverse assets. Liabilities can be divided into two parts as current liabilities and non-current liabilities. Sir, you already shared.
already shared චුට්ටක් ඉස්සරහට යන්න බං. ටිකට ඉස්සරහට යන්න. මොකද අපිට පේන්නේ ස්ලයිඩ් එක business transactions කියන. පොඩ්ඩක් බලන්න. ඔය presentation එක පොඩ්ඩක් එන්නකෝ බං.
Sir, can you see?
Now I can see transaction. Number 3 assets. චුට්ටක් යවනවා. මතන I think you are having some connection issue. But it's okay. Now we can see the slide of business transactions. Others also same, right? Am I correct?
Yes, sir.
Yeah. You can see the business transaction slide, but better you can move to the other. So I think you are discussing about liability, right? Am I correct, Yulmi? Assets can be here. Assets, okay. Yeah, okay, you can continue, Dulmi. No issue. You can continue. Now it's fine. Okay.
Yes, sir.
Now you can continue.
What are liabilities? Liabilities can be named as payables of business that assets, liabilities. Sorry, sir. As same as assets, liabilities can be divided into two parts as current liabilities and non-current liabilities. Examples for current liabilities can be named as trade creditors that arise when goods are purchased on credit for resale, acquired electricity expenses. Now, what is known as equity? The value of assets that belongs to the owner of the business is termed as equity. Our next element is income. What is known as income? Income can be defined as an increase in equity except due to the increase from capital introductions by the owner, received and commission received. Income belongs to the owners. Therefore, it should be added to the equity. As a result, equity increases. However, an increase of equity doesn't occur only from receipt of income. When owners bring additional capital to the business, it causes to increase the equity. This increase in equity is not considered as income. Our last topic is expenses. As income belongs to the owner, expenses should also be borne by the owners. Therefore, expenses should be deducted from equity and it costs to reduce the equity. However, a decrease of equity doesn't occur only from expense. When owners take goods or cash out of business for their private use, by equity decreases. Examples for expenses are salaries and wages, insurance expenses, cost of goods sold, and interest expenses. Thank you for listening to my presentation.
Right. Okay, Dulmini, well done. So I really appreciate your effort and the way you presented is really nice. and I think you exceed the time bit, right? Okay, so but it's fine. The thing I want to tell you, I think you are having a connection issue, right? But it's okay. We heard your, but I can't give you the comments, but because it takes time, right? Presentation එක මට ඔයාලට මේ comments දෙන්න බෑ. පොඩ්ඩක් යාගේ slide share කරාට අපිට එන්න පොඩි වෙලාවක් යනවා. Right? පොඩි case එකක් තියෙනවා ඒක නිසා. So I'll give you the comments later, right? Okay, Dulmi. So let's give a clap. Very well done, right? So let's really appreciate it, right? Okay. Then let's move to the other one. Danish, what's up? Presentation is okay? Something wrong, right? I saw your message. You can ready for the next week, right? Okay, right. Then Tuan, dual impact of transaction, right? Over to you.
Sir, can you see my screen?
Still not? Yeah, now we can see the presentation. Over to you.
Okay. So good evening, everybody. My dear sir and my friends. So I'm going to speak about the dual impact of transactions. So let's go to a little introduction of this. So as usual in a business, many transactions occur every day. So as a result, the values of assets, liabilities, equities, incomes, and expenses always change. So in accounting, these are known as the dual impact of transactions. In every transaction, it can cause to change two items of accounting in the accounting equation. So here's the equation: assets equals equity plus liability. So now next, let's go to double entry system. So as I mentioned, the dual impact in accounting equation has an every transaction to the accounting equation, and in here this dual impact must be recorded in accounts. So when we are recording, the same accounts must be recorded. Amounts should be recorded in two accounts. So each account has a debit and credit side. So if a value is debit, it must be credited in the other account. So hence this is called a double entry system. So this is account. So this is the only accepted structure that is used to record all the changes. So this is an example. So date, we used to write the date of the transaction. So the description is the account we are writing. Then LF means page number, while and the value means the rupees we have done the transaction. So let's see about the types of accounts. So the accounts, these are the accounts used to record all the changes. So here are the accounts. So asset account examples are like building account and cash account. Liability account, we have examples like bank loan account and creditors account. So equity, we have examples as capital account and drawings account. Income account, we have sales account and interest income account. And expense account, we have a salary expense account, Wi-Fi charges account. So when we are recording a transaction in account, this chart shows the basics. So asset and expenses accounts, when they increase, it's always debit, while when they decrease, they always be credit. So the liability, income, and equity accounts, when they increase, they become credit, while decrease, they become debit. So this is an example. So this is transaction happened in the 6th day of the second month. So description is cash amount. So 200 rupees, 200,000 rupees in the debit side, while the salary account, which is this, has become to the cash account in the credit side. So what's the ledger? There'll be a separate account which we will always maintain for each and every account. So not only assets, but even the other accounts. So therefore, this is called the collection of all the accounts is known as the ledger. Thank you, everybody.
So when it comes to the time, it's you have like 4 minutes, 2 minutes and 40 seconds, right? It means below 4 minutes, right? Okay. So right, okay, nice, well done. I really appreciate your effort, and your way you presented is nice. Others, can you please turn on this and But I want to tell you, your presentation slides are also really good. Shall we move to the first slide?
Wait, so you could start. So shall I stop sharing and reshare again?
Yeah. So what is your topic, Tua?
Dual impact of transactions.
Dual impact of, but you discuss about the double entry system. Understand, right? So dual impact of transaction means the first slide is okay, right? Let's move the first slide, please. Right. So dual impact means because of each transaction there are like something happen to the accounting elements, right? Some account elements can be increased, some accounts elements can be decreased. Understand? Okay. So never mind, this is okay. Let's move to the other slide. So double entry system about dual impact, dual impact of, sorry, I ask you to discuss about dual impact of transaction, and double entry system is another thing. I gave the double entry system topic to Abdul, right? So dual impact means because of any transaction, right? Sometimes accounting elements increase or decrease. That is the term called dual impact. Understand? For an example, let's say owner invested 50,000 to the business. What is the dual impact? Cash asset increase, capital equity increase. That is the dual impact. Understand? Okay. So not means the recording in the ledger account. It is the double entry system. Got it? Right? But it's fine. So though this topic is dual impact of transaction, you discuss about the double entry system. Right? So let's move to the other slide. This is the account, you can see. So this is the format of the account. Date, description, LF value, date, description, LF value. Okay, nice. Let's move to the other one. So there are different accounts. Asset account, liability accounts, okay. Equity accounts, okay. Income, okay. Expense, okay. Salary accounts, Wi-Fi charges account. That is the thing I want to tell you. Wi-Fi charges account.
Just say other expenses.
It's okay, but it is an expense. Saman Wi-Fi charge, okay, let's take Saman him account deck, mama accounts tibba කාලෙක මට අවු වෙලා නැහැ, right? Okay. Saman අපි ඔක්කොම දාන්නේ telephone charges account. Right? For the broadband expenses. Fine, never mind. Let's move to the other. So you can see this is the dual limit, not the dual limit, this is double entry system. Okay. The other one. You can see the double entry. So cash asset, cash account debit. Can you tell me what is the transaction in here? Forgot the transaction name. But paid nahi. Can you
This salary account increase, I mean, salary account debit rupees 200,000 and cash account credit rupees 20,000, 200,000.
business paid salary, right? Salary
Yeah.
200,000. Right? This is the double limit, not the dual impact. When it comes to dual impact, salary expense increase, cash asset decrease. Understand? Right? Okay. Then the other one, you discuss about the ledger. Ledger means the place where we maintain all our ledger accounts, right? Good. Next slide. Okay, thank you. Well done. I really appreciate your effort. And the thing I want to tell you, it's out of the topic, right? Okay, fine. Never mind. Let's give a clap, right? Okay. So then let's move to the other one. Abdullah, are you there? Abdul?
Sure.
Yes, okay. Your topic is double entry system.
Double entry.
Over to you. You can share the screen. You can start.
Hello, guys, and very good evening for all of you. First, I would like to start with a question that did you know? I will say a fact. Okay, did you know that every single financial transaction there's always an equal and opposite reaction? Yeah, that's right. To the fascinating world of accounting and double entry system. Today, I'm gonna explain about double entry system, which consists of debits and credits. In today's presentation, we are taking to deep into double entry system, the foundations it is built on, and why it is essential for business of all sizes. Have you ever wondered what keeps tracks all your money, both coming and going out? Or who invented accounting method that guides us today? Stick around because we are going to answer all these questions and more. So these are the topics that we are gonna see in this presentation, which is definition, and we are going to see about the father of who is the father of accounting, and we are going to see about the recording under 5 basic principle, 1 and 2. First up, what exactly is a double entry system? The way of recording the dual effect of transaction as debit and credit as two ledger accounts at the same time is known as double entry system. So simply, it's a method of bookkeeping that keeps track of every financial transaction in at least two accounts. That is credit and debit. So this the sense of this system is that for every debit there is an equal credit. That means if you sell a product, you note that income in your sales account, but you also note that you have less of that product in your inventory. Isn't it neat? Now let's talk about the father of accounting. Many people refer to Luca Pacioli as father of accounting. He was an Italian mathematician who lived in 15th century. In 1494, he wrote a book that laid out principles of double entry bookkeeping. But surprising is that Pacioli didn't invent this system. He simply documented it and made it accessible. But of him, business could understand to keep accurate records. Now that we have bit a history down, let's move to the 5 basic principles of double entry system. Asset equal equity plus liability. Asset equal equity plus profit plus liability. Asset equal equity, income minus expense plus liability. Asset equal equity plus income minus expense plus liability. Expense equal asset plus expense equal equity plus income plus liability. So these are the recordings things that are under 5 principles. Now let's go to the rules. So asset increase debit, asset decrease credit, expense increase debit, expense decrease credit, expense increased credit, liability increase credit, liability decrease debit, equity increase credit, equity decrease credit, debit, income increase credit, income decrease credit. This is the rule of transaction. And to sum everything up, the double entry system is reliable way to keep track of financial transaction. Thanks to Luca Pacioli, we have a marvelous method that business continue to use today. By following five basic principles, now assuring accuracy of your account and make information decisions. Remember, everything impact everything else in the world of finance. Understanding these principles in this vital is a vital step of your financial journey. Stay tuned for more knowledge. See you next time. Thank you.
Right. Okay. The time's up. Well done. Let's give a clap. Nice. And every day, Abdullah finding new techniques and introducing new techniques. Right. Okay. ඔහොම මෙමු පොඩ්ඩක් ඈ ඔය විදිහට මෙමු right බලන්න කොච්චර ලස්සනද මේකෙත් තියෙන්නේ right okay so then the let's move to the first slide please right okay so when it comes to your first slide you can see content first of all I want to tell you your effort is really appreciated and the way you presented is nice and the thing what I want to tell you මොකක් හරි කොලයක් බලන්නේ right document no honestly
No, I made the script.
you made a speech okay when it
Yeah.
comes to presentations you please don't made any speech got it right you need to දැන් නැත්තම් ඔයා මොකක් හරි බලාගෙන කියන්න කියලා මම ඔයා online හිටියත් මට කියන්න තේරෙනවද කියන ඔයාම හදන්නේද කතාව right sometimes you are the one who prepared it but the thing is we can catch it through the way you present understand okay right never mind so you can see the content this is Luca Placioli right and Luca Placioli yating innawa ape Abdul right definition father of accounting recording under five basic principle recording under five basic principle to okay let's move to the other slide you can see the double entry system definition you know the way one it's really simple and nice we can catch it that is the thing that is the way of presenting presentation එක කියන්නේ මේ වගේ slide එකේ පොඩක් දාලා ගොඩක් කියන එක වන් කියන එක තේරෙනවද right ඉගෙන ගන්න right you need to know why when it comes to professional presentations and when it comes to university level you need to do many presentations මම university එකේ ඉන්න කාලේ ඉහේ කේස් ගන්නට presentations so I'm accountant professional right so my professional is accountancy so we had to do many presentations okay that's why I'm giving this to you right so the way of recording the dual effect of a transaction as debit and credit in two ledger accounts at the same time is known as the double entry system very good let's move to the others so you can see this is the father of accounting okay other slide recording under five basic principles you know assets equal equity plus liability then සාමාන්‍යයෙන් මේ ඔයා කරලා තියෙන accounting equation එකෙන් අරක derive කරන්න තියෙනවා අමාරුයි right so this is in my tutor also using the accounting equation yes you can see this the accounting elements assets expenses equity income and liability right okay let's move to the other slide so you can see when asset increase and expense increase debit assets and expense decrease credit liability equity and income increase credit liability equity and income decrease debit okay it's really simple and nice no any tough things we can understand it and I think you exceed the time right main thing right more than 6 minutes right okay well done let's give a clap nice right okay So then let's move to the other one. Abdullah done. Saurangana, are you there?
Yes, sir.
Okay. So your topic is ledger account, ledger, and balancing of ledger. Right? Over to you. You can share. Yeah, you can share the yeah, you can start.
So can you see my screen?
Yeah, we can sense.
Okay. Good evening, everyone, to my dear sir and my dear friends. My name is Rangana, and the topic for today is ledger accounts and balancing of ledger. First of all, you can see my content. Today, I hope to talk with you about what is known as a ledger, examples or types of accounts, format of a ledger account, steps to be followed when balancing of ledgers, and then finally, most important, balancing of ledger. Let's see what is known as a ledger. As we all know, a separate account has to be maintained for each type of asset, and in a business, there are many types of assets. So there are many types of accounts in a business as well. So simply we can say it as a collection of all accounts is known as a ledger. But if we want to explain it briefly, we can say it as a ledger in accounting refers to a book containing different accounts where transactions about a specific account are recorded. So in a ledger account, only one transaction are recorded. That means the transactions belonging to a one certain account is recorded in one ledger. Let's see examples or types of accounts. Generally, there are 5 types of accounts. They are assets account, liability account, equity account, income account, and expense account. You can see some examples in here for each type of asset. And then the format of a ledger account. Here you can see my format that I have made to show you the format of a ledger account. There are 8 columns in a ledger account. Their description in left value, and then again their description in left value. The right side of the ledger account belongs to the credit side, and the left side belongs to the debit side. So the first 4 columns belong to the debit side, while the last 4 columns belong to the credit side. Here I have put some numbers so we can identify what each of these column mean briefly. So number 1F5, that's the date. That means the date that the transaction took place in the business. Number 2 and 6, that's description. So in description, we write the name of the account which is used to record the other end of the transaction. So for an example, if the owner invested additional capital and this is the capital account, we write the description as cash account. And then number 3 and 7, it's the LF or ledger folio. That means the ledger folio or the page of the account that is used to record the other end of the transaction. Like the description, we write the page of the account that is used to record the other end of the transaction. And then number 4 and 8, that is the value for the transaction. That means the amount of that transaction. Let's see balancing of ledgers. I have made 4 steps that should be followed when balancing of ledgers. The first step is we should identify the higher side of the ledger account and then get the value of the higher side, and then write that value on both debit and credit side. And the next step is to get the sum of the transactions of the lower side. But in here, we don't write the sum of that lower side. We just get the total and then we subtract it from the higher side. So for an example, in a cash account, the higher side would be the debit side. So we get the total of the debit side and then write it on both sides. Then get the total of the credit side and then subtract it from the debit side. So the third step is to write that answer that we get in the lower side with the description as balance carried down or BCD, with the date as the last date of the respective month. So if it is November, then it would be the 30th of November, BCD, the amount. The fourth step is write that same answer, that means the BCD answer, in the higher side of the account as balance brought forward or BBS, with the date as the first of the following month. So if it is November, then the BBF date would be 1st of December. So these are 4 transactions that took place in a certain business during the month of November 2023. Now I'm going to talk with you about how to balance the ledger with this cash account. You can see in here the cash account, debit and credit side, the generally accepted ledger account, date description in left value, date description in left value. In date, you can write the year as 2023, so you don't have to repeat it again when recording transactions. Same goes for value. We can record rupees in the value column, so we don't have to write it again when balancing of the ledger. So I had recorded the 4 transactions in the cash account. Now you can see this is the cash account. Usually in asset and expense account, the higher side is usually the debit side. In equity, income and liability account, the higher side is the credit side, but it may change with the circumstances. So in here, we can identify the higher side as a debit side. The total is 520,000. I got the total as 520,000, then wrote it on both sides, debit and credit side. And then I got the total of the lower side. That means 55,000 plus 15,000, that is 70,000. Then I reduced 70,000 from 520,000. Then the answer was 450,000. Then I wrote the 450,000 as BCD in the credit side because it is the lower side. This is a cash account asset. Higher side is a debit side. Lower side is a credit side. So I wrote that 450,000 as BCD with the date as the last day of the November, that is 30th of November. BCD 450,000. Then I wrote that same amount as BBF in the higher side, in the debit side, with the date as the first of the following month, that means 1st of December. 1st of December, balance brought forward 450,000. So you can see in the following accounts, I have done the same thing. Balance brought forward, balance carried down. In the capital account as well as rent income account, rent expense account, I have got the total of the higher side, then wrote it on the both side, got the total of the lower side, subtract it from the higher side, then wrote that answer as BCD in the lower side, as BBF in the higher side, and then we can see drawings account. So that is it for my presentation. Thank you for listening.
Right. Okay. Well done. Give a clap. Nice. Really appreciate it. Can you please turn on the videos, others? So your time's up. I think we exceeded the time, but I think I can appreciate your effort, and the way you presented is really nice. The topic is about ledger accounts and balancing of ledger, right? Okay. So let's move to the first slide. Content. You can see ledger example for type of ledger, type of accounts, format of a ledger account, steps to be followed when balancing of ledger. Okay. So when it comes to first slide, next slide, you know, it's all about what is the ledger. Ledger means the place where we maintain all our ledger accounts, right? Let's move to the other slide. Then you can see after that, example for types of account, you know, assets, liability, equity, income, expenses. These are the types of accounts you can see, right? So this is the format of ledger account, you know, date description, LF value, date description, LF value, like One said, right? So then after that, you can see the steps to be following when balancing of the ledger. You have clearly mentioned how to balance off the ledger accounts, you know. First we get the higher value side total, and we write it, recording the both higher value and lower value. And after that, we take the lower value side total and deduct it from the higher value side total and write it at BCD in the lower value side and BBF in the higher value side, right? Okay. So others, please turn on the videos, right? Not in the cut, right? Okay. So you can see following a transaction that occurred in the month of November 2023, you can see a different transaction, right? Owner invested capital, receive rent income, likewise, how those things have recorded and the balance it off, right? Okay, well done, really appreciated, and it's really nice, and there's a consistency, and the way you present really nice. Okay, let's give a clap, right? Okay, then let's move to the other one. After that, Heshan Sir having matter, right? The laptop, Heshan Sir, right? Are you there? The answer told me something. Right. Then Azmi, are you there? Did you hear it? Ah, right. Aragam. Yes. Are you ready?
Yes, sir.
Okay. So when it comes to Arakam's topic, it's cash book with discounts, right? Okay. Over to you. Can start.
Hi, beautiful people. First, I would like to thank Sir Heshan Goda to give me an opportunity to make an excellent presentation here. Today, I am here to discuss about the cash book with discounts. First, I would like to discuss about cash book. What is a cash book? The prime entry book, which records the transactions related to all cash receipts and cash payments during a specific period of a business, is called a cash book. Examples for receipts and cash payments. First, I have divided this, and I like to first I like to discuss about cash receipt. So when we talk about cash receipt, received money as owners, it was capital, and cash sales, obtain a bank loan, cash received from debtors, received money from income sources. And I have mentioned some of examples for received money from income sources. Examples are rent income received, interest received, investment income received, commission received. And the balance one was cash received by selling fixed assets. Now I would like to discuss about cash payments, as I said above. Cash purchase, payment to creditors, payment of bank loan, purchase of fixed assets, cash drawings, and the last is cash payment for different expense sources. I have given some examples for these two. They are electricity payment, salaries payment, rent payment, water bill payment, commission payment. I would like to give a special note in this presentation. Businesses may receive checks as receipt from cash sales, debtors or other income sources. Therefore, checks received should be recorded in the cash book, similar to recording of receipts of cash until it's deposited in the bank account. Because if the checks so received are not banked on the system on the same day, then they can be used as currency notes. Now, I would like to discuss about source documents used when recording transactions in cash book. Cash receipt, it means receipt. In bracket, I have mentioned cash memo. Cash payment, payment voucher. I'd like to discuss these separately in other slides. First, I would like to discuss about receipt. When a business receives cash, the business will issue a document called a receipt to the party who gave money to the business is evidence for such a receipt. Receipts, the written evidence of the cash received by the business. A duplicate of the receipt should be received by the accounts branch, and it should be used as a source document to record the receipt of cash in the cash book. Factors include in a receipt. The first one was the date of the cash receipt. These are one of the factor which the receipt should be included. The reason why it was received, the amount received, the signature of the cashier, all the other information that include in a source document. For example, I have mentioned here receipt number, business name and details of other business. There is no specific format for a receipt. A business could use a receipt that has a general format. Next, I would like to talk about payment voucher. The definition was a payment voucher is a document used to record and authorize cash payments made by a business. It serves as a proof payment and is used to track expenses. Next, I would like to talk about essential details about payment voucher. The first one is date of payment, payment amount. Third one is payment method. The fourth one is purpose of payment. And fifth one is supplier or recipient. See, and the last one is authorizing signature. Next, I would like to talk about purpose. Payment vouchers are used to ensure that all payments are properly documented, authorized, and accounted for. This helps to prevent fraud and errors. And here I have mentioned some importance about payment voucher. We'll check it. They provide a detailed record of all payments made by a business. This information is crucial for financial reporting, tax purposes, and auditing. Now I would like to talk about dual function of a cash book. Cash book is prepared to record the cash that is received by the business from different ways and cash payment done by the business. All the cash receipts and all the cash payments are recorded first in the cash book in a sequential order. Therefore, it acts as a prime entry book. Since the cash book is having both debit side and credit side, it is considered as a ledger account. The first one, cash book is prepared to record the cash that is received by the business from different ways and cash payment done by the business. There was a function, I have mentioned it, function of a prime entry book. And I have mentioned below the function of a prime entry book, all the cash receipts and all the cash payments are recorded first in the cash book in a sequential order. Therefore, it acts as a prime entry book. And second one is function of a ledger account. I too have mentioned it, and since the cash book is having both debit side and credit side, it's considered as a ledger account. Now I would like to talk about preparation of a cash book. A cash book is a crucial financial record for any business. It details all cash receipts and payments made by the organization. The cash book is used to track the balance of cash on hand. Accurate recording of cash transactions is essential for financial management and responding. And I would like to talk about recording transactions in the cash book. The cash book is a critical financial record for any business. It provides a comprehensive overview of cash inflows and outflows. Recording transactions in the cash book is essential for accurate financial management and reporting. The process involves accurately documenting all cash receipts and payments. This includes details like the date, amount, the purpose of the transaction. Source documents like receipts and payment vouchers are used to verify the accuracy of each entry. And I would like to say thank you for the given opportunity, and bye. See you all next time.
Right. Okay.
And I would like to say thank you for the given
Right. Okay. Well done. Give a clap. Right. Okay. So first of all, I want to give some comments. Hi, beautiful people, and it's nice. The way you started is really nice, right? Hi, beautiful people, right? And the thing I want to tell you, what is the topic? Cash book with discount. So where are the discount part, right? So where's the discount part? No any information about the discounts, huh? Right? But the way you presented and your effort is really appreciated. Shall we quickly move the first slide, please? Yes. Cash book with discounts, right? You discuss only about the cash book. Where's the discount part, right? Okay. Or Ratu huh? Right. Okay. So when it comes to the next slide, you can see in here, what is the next slide? Cash book, the definition. So the consistency is nice, and we can see the presentations. And the other thing what I want to tell you, presentation එකේ animations පොඩ්ඩක් වැඩි අඩු කරන්න ඕනේ. සාමාන්‍ය animations වලට යද්දි ඔයාව නතර වෙනවා මං කියන එක තියෙනවා. right? Animations ගොඩක් දැම්මාම ඔයා slides අතර මාරු වෙද්දි ඔයාව stuck වෙනවා. And you exceed the time. I think it's nearly like 9 minutes or 10 minutes. Around like 8-9 minutes. I gave the time 4 to 6 minutes. Understand? Right? Okay. Never mind. So you can see the definition of cash book. It's simple and nice. Well done. Then the other slide. What is the next slide? Next slide is about cash receipts and cash payments. Okay. Then let's move to the other part. Special notes, in here discuss about checks, right? If the check received and deposited later, it will be deposited where we record cash book, right? Okay. So let's move to the other one. You can see the source documents relevant to cash book. Let's move to the other one. So receipt and payment voucher. So this is in here, the details are much, right? When it comes to things, when it comes to the thing, what I want to tell you, when you are doing a presentation, the slide then are the Abdul Gara dual impact of transaction, sorry, double system make a definition. Don't use the chat books, right? එතකොට මේ අබ්දුල්ගේ තිබ්බ වගේ සාමාන්‍ය ස්ලයිඩ් එකේ තියෙන දේවල් පොඩ්ඩක් කියලා ඔයා ගොඩක් කියන්න. Understood? Right? Okay. Let's move to the other one. මම මේ ඔයගොල්ලෝ හදන්නේ ඉදිරියේදී presentations කරන්න practice කරවන එක. ඔයගොල්ලෝ මාව අනාගතේ මට පින්දෙයි මේක දැක්කම. තේරුණාද? Right? එන්නකො කැම්පස් එකක් පැත්තේ එතකොට තේරෙයිවා. මං කිව්වේ බොරුද කියලා ගිහිල්ලා බලන්න. මම නෙමෙයි normal teacher කෙනෙක්, doctor කෙනෙක්, professor කෙනෙක් comments දෙද්දි බලන්නකො. මං කියන්නේ බොරුද කියලා. Right? Okay. So ඔයා university level එකට ගිහිල්ලා professor කෙනෙක් කරේ කවුරු හරි වට comments දෙද්දි මීට වඩා දරුණු. තේරුණාද? මම කියන දේවල් ටිකම තමයි කියන්නේ. මොකද මට ඇහිලා ඔය ටිකම තමයි කියන්නේ. Right? Okay. Then let's move to the other one. Payment voucher, and in here you have discussed dual impact, dual function of the cash book. Okay. So and the other thing, dual function of the cash book, preparation of cash book. Okay. And the other thing, right, recording transactions in the cash book, right? Okay. So in here I didn't hear anything regarding the discount. That is the main thing. Okay, right? Okay, well done, Larry. We appreciate the effort, right? Okay, let's give a clap. Okay, nice. Bye bye. Right? Okay. Then let's move to the other one. Vagisha not here. Gihansa, you there?
Yes.
So topic is about bank account related transaction, right? Are you ready?
Yes, sir.
Okay, you can see it.
Sir, can you see the screen?
Yes. Don't use the chat box, enough.
What?
Okay, let's chat box use karanne passe. Okay, you can start. Yes.
Hi everyone. Today I'm going to talk about banking transaction, and I'm Gihansa. So today's content is what is a transaction and about Central Bank of Sri Lanka, account deposits, savings account withdrawals, online banking transactions, and mobile banking transactions. What is a transaction? Transaction is an exchange of money between a customer and a financial institution, or between internal bank accounts. Central Bank of Sri Lanka, also known as CBSL, it is the main apex bank of Sri Lanka, and founder of CBSL is Mr. John Exter. He was a British governor, and Central Bank of Sri Lanka, there is an act number called Act number 16 of 2023. It was introduced in past year. Then account deposits. There are 4 types of account deposits: cash, checks, electronic transfers, and ATM deposits. Cash. Cash is deposited directly at bank branch, and checks can be deposited in person or through a mobile phone or mobile app. Like in BOC we have B app, like that. We have the checks, and electronic transfers, transferred from another account or employer. This is mainly used in like companies or somewhere that people work. And ATM deposits, deposit cash or checks at an ATM, automated teller machine. Then the savings account withdrawals. For the ATM, we have the debit card, as you can see here, and branches, cash or checks. Online banking, we are transferring. The mobile banking also, as I told you before, the transfers. And online banking transactions, account transfers, that they move money between accounts. Bill payments, pay bills directly from accounts. And check deposits, deposit checks via mobile apps like B app. And account statements with transaction history. Mobile banking transactions, account access, view account balance and transactions. Bill pay, pay bills directly from accounts. And money transfers fund between accounts. And mobile deposits, deposit checks using phone camera. Location services, find ATMs and bank branches. And thank you everyone. And okay, sir.
Okay. So well done. Let's give a clap, and in line with the time. So the way you presented is nice, and the slides are really good. And what I want to tell you, what is the your topic? Bank account related transactions, right? So today we are doing
Yes.
the presentation regarding the accounting parts. Bank account related transactions mean you need to discuss about deposit cash in the bank, deposit checks in the bank. Understand? right? Withdrawal of checks from the bank, understand? Dishonoring of checks. These are the transactions relevant to the bank. Got it? Right? These are the transactions relevant to the bank account. But you discuss about the business studies part. Got it? Right? Okay, so let's move to the other slide. In here we can see the what is a transaction. Okay, exchanging money between a customer and a financial institution, between a or between internal bank account. This is like what is a bank transaction. Normally transaction means, you know, resources exchange between business and a stakeholder, right? So this is, you have put the definition about the what is a bank transaction, understand, right? Okay, let's move to the other slide. Okay, this is the Central Bank of Sri Lanka. Founder, you can see the founder. New thing to you, or අලුත් දෙයක් ඉගෙන ගන්න පුළුවන්, right? Uh, so and it is the main apex bank of Sri Lanka, the founder of TBL, likewise. Okay, right, let's move to the other. So account deposits, you know, cash checks මට ඇහුණා check එක B app එකෙන් දාන්න පුළුවන් කියන. checks B app එකෙන් දාන්න බෑ. checks දාන්න පුළුවන් account මොනවාද bank counter එකට ගිහිල්ලා තමයි දාන්න පුළුවන්. Okay, so never mind. Then electronic transfers we can do via B app, right? ATM deposits and the cash, right? Okay, then the other thing,
පටලැවුණා සර් ඒක.
right? Next slide. Savings account withdrawal. Okay, you can see different withdrawals. Okay, next slide. And the other thing you can see in here, online banking transactions. Okay, let's see the other slide. Then mobile banking transaction, account access, money transfer, location, service, bill pay, mobile deposits. Okay, right? So right, okay, so well done, we appreciate the effort, but you know, discuss another separate, completely separate part. Okay, right, okay, let's give a clap. Nice, right? So then let's move to the other one. Done. Then Shayon, are you there? Shayon, send me a message, right? Next Monday.
Sir,
Yeah,
excuse me, sir.
yeah.
I did it now.
Huh?
I did it now.
You did it, you can do it right now. Yes,
Oh, sir.
okay, you can share. Others, please turn on the videos and wait. So what is your topic? Summary of source documents and primary books, right? Okay, you can start.
Good afternoon, my dear friends and sir. My topic is summary of primary books and source documents. What is a primary book? Primary book is where the transaction made by a business is where the transaction made by a business are recorded for the first time before they are entered into the separate ledger accounts is defined as prime entry book. Some of the examples for prime entry books are follows: cash book, petty cash book, purchase journal, general journal, and bank account. Prime entry book is also known as a day book. Cash book. Cash book is a primary book where all the transactions which has recorded by cash basis transactions. Examples: purchase goods rupees 50,000 from cash basis. This is a structure of the cash book. It is consist of date, description, ledger folio, and amount. Date, description, LF or the ledger folio, and the amount. Cash book and its source documents. Cash books consist of two source documents, namely receipt voucher and payment voucher. Petty cash book. The transactions that are given by two main cashier to petty cashier for the petty cash payments of a business is defined as the petty cash book. This is the structure of petty cash book. It is consists of date, amount received, date, particulars, amount paid, stationery and printing, cartage, loading, postage, etc. Petty cash source documents. Petty cash payment voucher is the source document of petty cash book. Purchase journal. A specialized type of accounting log that keeps track of orders made by a business on credit or an account is defined as purchase journal. This is the structure of purchase journal. It is consists of date, the supplier's account credited, invoice date, payment terms, PR, accounts payable credit, item 1 debit, item 2 debit, item 3 debit, and the page number. Purchase journal. The purchase journal, the source document of purchase journal is the purchase invoice. General journal. A set of numbered accounts a business uses to keep track of its financial transactions and to prepare financial reports is defined as general journal. This is a structure of general journal. General journal source document. General voucher is the source document of general ledger of journal. Bank account. An arrangement made with the bank whereby one may deposit and withdraw money and in some cases to be paid interest is defined as a bank account. This is the structure of bank account. Bank accounts and its source documents. Check return notification, deposit slips, credit memos, invoice. Thank you for listening to my presentation.
Right. Okay, well done. Let's give a clap. Right. Okay. So let's move to the first slide. Your topic is about summary of primary book and the source documents, right? Okay. So the slides are good. There is a consistency, and when it comes to the first slide, let's move to the first slide. What is the primary book, right? So the primary book is the book in where the transaction made by business are recorded for the first time before they are entered into the separate ledger account defined primary books. Really good. That is the definition, right? Let's move to the other slide. Then you can see some of the example for primary books are as follows: cash book, petty cash book, bank account is there, purchase journal. Where's the sales journal? Sales journal is not in here, right? Okay. So let's move to the other slide. You can see the cash book, right? Cash book is the primary book which record all transaction on cash basis, right? Okay. Other slide. You can see the structure of the cash book. Date, description, LF value, date, description, LF value. Better you could include the discount columns also. Discount allowed and the discount received also, right? Okay. Let's move to the other one. Cash book and its source document, not receipt voucher, it's receipt. Okay, and the cash memo. And the other one is payment voucher. Okay, receipt and cash memo both are same. Let's move to the others. Petty cash book are the transactions that are given by to main cashier by the main cashier to petty cashier for the petty cash payments of a business. It is the simplest definition of the petty cash book. This is the simplest definition of petty cash book. Okay, and the other thing, this is wrong. This structure. This is from Google, right? There is another thing. So our in our definition, no any date, only date in available in the credit side. Am I creative, guys? Okay, so the structure is wrong. Okay, let's move to the other one. Petty cash voucher is the source document for the of the petty cash book. Okay, nice. Then when it comes to the other thing, purchase journal, the definition is good. The transactions which we record, the credit purchases, right? Okay, let's move to the other slide. Then you can see the purchase journal structure. This is also wrong because this is from Google and our structure is completely different, right? Okay, let's move to the other. Purchase invoice is the source document of purchase journal. Okay, nice. Let's move to the other one. And general journal is the set of numbers, accounts or a business used to keep track on its financial transaction and to prepare financial reports. Okay, that is the term called general journal. Okay, so this is the structure also wrong. Okay, and you could include what are the transactions we record in the general journal. You know, purchase non-current assets on credit basis, sale of non-current assets which had for the usage purpose, right? And owner's goods drawings. Can you remember, guys? Error correction entries, right? Opening entries and the adjustment entries, right? Okay. The other one. Source document is the journal voucher, not the general ledger. Source document is journal voucher, not the general journal ledger, right? Okay. Next slide. So bank account, an arrangement made with the bank whereby one may deposit and withdraw money, and in some cases be interest is defined as bank account. Cases be paid interest. Okay, right? So the other slide. This structure is also wrong, right? So our structure is different, right? Let's move to the other slide. Then bank account source document. You know what are the source document? Check cash deposit slip, check deposit slip, credit memo and invoice කියලා දේවල් නැහැ. Check return notification, okay. Bank statement, likewise, right? Okay. So next slide. I think right. So Master Shion Gamage, your presentation is good. We can give marks for your effort, but some things are wrong, right? Okay, never mind. Let's give a clap, right? Okay, so right. Then let's move to the other part. Finally, Shehara, discounts. Sorry, Sehra. Right? Right? You can start.
Sir, can you see the screen?
Yeah, we can see this. You can start.
Very warm greetings, everyone. I'm Sehra, and today I'm ready to do a presentation about discounts. Foremost, I would like to thank our dearest sir, Sir Heshan Sir, for giving me this wonderful opportunity to do a presentation. So today I will be talking about what are discounts, the types of discounts, trade discounts, cash discounts, discount allowed and received, and including calculations. So shall I start over because there's something wrong with my computer when I share the screen?
Yeah, okay. You can start from Yes.
So I think my computer is stuck. Just give me 1 minute.
Think Afla having a matter, Afla will do the bank account next week, right? Yes, Sehara, are you there?
Yes, sir, I'm there, but my computer is stuck.
Ah, sorry.
I'm there, sir, but when I share the screen, the computer is stuck.
All right. Okay, then shall we do next week?
Just give me 1 minute, sir, if time
Okay,
is.
you can give a try. Yeah, give a try. So when it comes to your percentage, till that I'll give the comments to others. Can you please turn on the videos, everyone? Afla, Sheo, Anudi, Dulindi. මේ සැරේ දුලින්දි නෑ. දුලින්දි topic එකක් ගත්තේ නෑනේ. Right? Right. Dulmini and Tehansa. Right? Okay. Ko, ඔක්කොම පේනවා. Where are the others? Tehansa, are you there? Right? Okay. And the other thing what I want to tell you, when it comes to your presentations, I can give you like good marks, but සමහරු කතා කරන්නේ තාම topic එකෙන් පිට. That is the main thing. Understand? First of all, you need to understand the topic and get ready for the presentations concerning the topic. ඔහොම නම් යන්න එපා. campus වලට. Right? ගියාම ගෙදින්ම ලකුණු නැහැ. Okay guys, right? So සමහරු topics ගත්තේ නැහැ මම දැන් ආයෙ දෙනවා කරපු නැති අය ආයෙ next week කරන්න ඕනේ. Right? So what I want to tell you, ඇයි මම presentations දෙන්නේ ආසාවට නෑ. presentations දුන්නාම ඔයාට දේවල් practice වෙනවා. මං කියන එක තේරෙනවද? Right? ඒකට හේතුව සාමාන්‍ය presentation එකක් කරන එකේ වාසි ගොඩක් තියෙනවා. ඒකට හේතුව සෙනුකමල්ලි topic එකක් ගත්තේ නෑනේ. Right? presentation කරාම ඔයාට තියෙන වාසිය තමයි සෙනුක ආයුධය. Can you hear?
Excuse me, sir.
Yes?
Sir, shall I try?
Yeah, you can try. සෙනුක වෙන වැඩක්ද කොහෙද?
Sir, can you see my screen?
Yes, we can.
Very warm greetings, everyone. I'm Sehra, and today I'm ready to do a presentation about discounts. Foremost, I would like to thank our dearest Sir, Sir Heshan Kodagada, for giving me this wonderful opportunity to do a presentation. So today I will be talking about what are discounts, the types of discount, trade discounts, discount allowed and received, and an example including the calculations. So what are discounts? Discounts are a step down in the primary marketing cost or a reduction in the selling price when something is being traded or sold, and discounts are usually used in order to promote sales. Mainly, there are two types of discounts, trade discounts and cash discounts. And those two can be commonly divided again as discounts received and discount allowed. Trade discounts are the type of discounts granted at the point of sales when trade goods are being purchased. The aim of imposing trade discounts is to promote the sales or to boost. What are cash discounts? Cash discounts are the type of discounts granted when debtors pay cash to creditors to cover up their debts. For example, we can say purchase of trade goods on credit basis, and the aim of imposing cash discounts is to collect the money more quicker. This discount is only valid for a certain period of time, for example, within 1 week. So discount allowed, we can say that discount allowed is an expense to the business and it is offered to debtors when they settle their debts. And a discount allowed column, a special column for this, is drawn at the debit side of the cash book of the business. Discount received is considered as an income to the business, and this type of discount is deducted by the creditors from the amount due. A special column for this is used in the credit side of the cash book to record these types of discounts. Now let's refer to an example. Here we have the beauty factory who is the supplier of cosmetics to HK Beauty Salon. The beauty factory sells one set of cosmetics for 10,000 rupees and offers a trade discount of 15% for customers buying 10 or more sets of its cosmetics. The HK Beauty Salon agrees to buy 10 sets of cosmetics on credit basis, and when cash is being paid, Beauty Factory offers a cash discount of 5% if cash is settled within 30 days. Now let's do the calculations. Beauty Factory said that they offer a trade discount of 15% for customers buying 10 or more sets. So according to this example, the customer buys 10 sets. When one set is valued 10,000 rupees, 10 sets are valued 100,000 rupees. And when we calculate the discount, we have 1,500 for each set and 15,000 in total. When we deduct the discount value from the total value, we have 85,000. And this 85,000 rupees is the only value we record in accounts regarding this transaction.
Yes, you can continue. Finish? Yeah. Sarah can't hear. You can get.
Now let's see how this is recorded in the accounts, in the books of accounts. In the books of accounts of the beauty factory, the debit entry is recorded in the HK Beauty Salon account, who is a debtor, as sales 85,000, and the credit entry goes to the sales account as HK Beauty Salon rupees 85,000. And in the books of accounts of HK Beauty Salon, the debit entry goes to the purchase account as Beauty Factory 85,000, and the credit entry goes to the Beauty Factory account, who is a creditor, as purchase 85,000. Beauty Factory also said that if the cash is settled within 30 days, a 5% cash discount will be awarded. So when we calculate the amount of discounts, the amount to be paid is 85,000 and the cash discount is 4,250 because it's 5% out of 85,000. When we deduct the discount, we have 80,750. Now let's see how this value is recorded in the accounts. In the books of accounts of the beauty factory, the debit entries goes to the cash book and the discount allowed account. The cash book records HK Beauty Salon 80,750 and the discount allowed account, which is an expense account, records HK Beauty Salon 4,250 in its debit side. The credit entry goes to the HK Beauty Salon account debtor as cash 85,000. In the books of accounts of HK Beauty Salon, the debit entry goes to the Beauty Factory account, who is a creditor, as cash 85,000, and the credit entries go to the cash book and the discount received account. The cash book is recorded as Beauty Factory 80,750, and the discount received account, which is an income to the business, records Beauty Factory is recorded as Beauty Factory 4,250. So as a summary, we can say there are two main types of discounts, namely trade discount and cash discounts. And then we can develop those two commonly as discounts allowed, which is an expense, and discount received, which is an income. So hope you all understand my presentation. Thank you for listening. Have a nice day.
Okay, well done. Let's give a clap. Nice, right? Okay, let's move to the first slide, please. Right, right. Well done. Your colors are good, right? Colors in the slides are good. Don't need to share, like just for first slide you can see this is about agenda. You can see uh, yeah. So in here you can see yeah. Next slide, discount. Now after that, agenda. You can see the content, right? It's good. Let's move to the other one. So then you discuss about what is a discount, right? A step down in primary marketing costs when something is being traded can be titled as discount. Okay, discount are usually in order to promote sales. Not only that, in order to promote sales for the trade discount, cash discounts is to collect the cash quickly, right? Okay, right. Let's move to the other one. So two types of account: cash discount received and discount allowed, and discount received and discount allowed relevant to cash discount and the trade discounts. Okay, let's move to the other slide. So trade discount, type of discount granted at the point of sale when the trade goods are being purchased. Aim to boost sales. Okay, next one. Then cash discount, you can see type of discount granted when debtors pay cash to creditor to cover up their debts to collect money quicker, right? Okay, let's move to the other slide. You can see after that discount allowed and discount allowed things in here. These discount allowed and discount allowed are cash discounts, are not the trade discounts, right? Okay, let's move to the other. Right. So I can see there's an example regarding beauty trading, right? So okay, you can see there is a credit sale, and if the cash is paid within 30 days, 5% cash discount giving, and also when the sales is made, 15% trade discount can be identified. Okay, to the other slide, please.
Sir,
Yes.
සර්ට එකක් මෙතන නෝට් නැද්ද?
Oh no.
එකක් මෙතන සර්ට නෝට් නැද්ද?
But
ඇයි කියලා හිතන්නේ නැද්ද මෙතන එකක්?
අඩුයි කියලාද කියන්නේ?
නෑ නෑ සැලොන් එකේ නම දැක්කම සර්ට හිතෙන්නේ නැද්ද ඇයි කියලා?
නෑ.
වැඩක් නෑ සර්. කවන්නේ.
Beauty factory ද?
නෑ නෑ
සර් HK සලෝන් කියලා ඉතින් ඉතින් ටිකක් කල්පනා කරන්න.
මොකද?
HK සලෝන්.
ඇහෙන්නේ
සර් HK means හේෂාන් කොදාගන්න.
ඒ වගේ
බොඩින් සැලූන් එකේ නම තියෙන්නේ මොකද්ද? Beauty trading නේද?
අයියෝ නෑ සර් HK beauty salon කියලා තියෙන්නේ.
HK beauty salon. එන්න ඕගලන්ට facial දාලා දෙන ඕන කෙනෙක්. Right?
නමක් මතක් කරා සර් නෑ නේද ඔයාගේ නම
Okay. Let's move to the other one. Right. Right. Okay. Nice. beauty factory, right? Okay. මේක හොඳට තේරුණාම මෙතන කට්ටියට මෙතන ඩිස්කවුන්ට් එකක් තියෙනවා 15% trade discount. එතකොට selling price එක 100,000 reduce up to 85,000, right? Okay. Let's move to the other one. So you can see a beauty factory and HK beauty salon. Beauty factory is the selling part and HK beauty salon, my one is the purchasing part, right? So HK beauty salon is the data of the beauty factory and beauty factory is the creditor of the HK beauty salon, right? Okay, let's move to the other. You can see the double entries. තේරෙනවා ඇති කට්ටියට දාලා තිබ්බ හොඳට, right? Okay. So after the discount thing also you can see after discount you can see in here 85,000 into 5% means 4,250. So 80,750 is the after discount price. Okay. Let's move to the other part. Right? So you can understand these things. මම ඉතින් කියන්න ඕනේ නැහැ සිහිර හොඳට කියලා දුන්නා නේද? කොහොමද discounts වලට පස්සේ එන්නේ කියලා, right? Okay, let's move to the other one. Right. Okay, the way you presented and the other things are really nice and this is the summary. So you explained well and the slides are really good and colorful and we understood everything properly. Let's give a clap. Nice. Well done. Right?
Excuse me, sir.
Yes.
අපිට දැන් පුළුවන් ද සර් ඒ වගේ ගණන හදනකොට T shape වල දැන් exam එකේ වුණත් T shape use කරන්න පුළුවන් නේද?
exam එකේ T shape ගහන්න යන්න එපා. මං කියවනේ අර ක්‍රමයක් අමාරු වුණොත් time නැති වුණොත් විතරක් ගන්න. Right? Okay, so no any time to do the other things. I mean our no any time to do our paper. හැබැයි අවුලක් නෑ. මම හිතන්නේ කට්ටිය හොඳ knowledge එකක් ආවා. Am I correct? Send me a thumbs up. I think you gain a good knowledge, right? Through this one because it's a mixing thing, right? Okay, so I heard really good things and hope everyone others will do the next week, right? කරපු නැති අය next week මොනවාද ප්‍රශ්න ටිකට මම කිව්වේ දේවල් හදාගන්න. මොකද මේ වගේ ප්‍රසන්ට් බය නැතුව කතා කරන්න පුළුවන් ඉන්න. සමහරු ආවෙනදත් අනේස ටොපික් එකක් දෙන්න කියලා ඉල්ලගත්තා. right? ඔය වෙන්න වෙලාවක සලූන් එක පැත්තේ කොණ්ඩේ කපලා දෙන්න, බෙල්ල කපලා දෙන්න, facial එකක් දාලා දෙන්න. Right, okay, thank you for the participation. Good night. Good night. God bless. Let's meet on this Friday free class. I'm going to discuss about cryptocurrency, right? Okay, bye.
සර් අපිට ෆ්‍රී කරලා දෙනව නේද?
ඔව් ෆ්‍රී කරලා දෙනවා අනිවාර්යයෙන්.